Greetings, Inderes TV viewers. Let's talk about Nordea's third quarter results with Group CFO Ian Smith. Ian, thanks for having me here.
Great to see you again, Valerie.
And I have to again congratulate on very stable results. What's your take on Nordea's third quarter?
Yeah, it was a good quarter. When I think about the results we delivered, so return on equity of 15.8%, well above our target range. And I was talking to some of our leaders this morning and saying, it feels like we delivered on every line. We saw growth, so lending up 6%, retail deposits up 8%, assets under management up 11%. So I think good growth in the quarter. Very much, I think, led by September. July and August are normally quieter months given holiday season and things like that. But September was very strong. So the quarter finished strongly, and we'd like to see that continue. Standout for me is our cost performance. So our costs were flat year on year, which reflects some of the action that we're taking just to manage our cost base. So I think that's positive. And we upgraded our guidance for costs for the full year. Previously, we'd said costs would grow 2 to 2.5%. We now think that our costs for the full year will be around 5.4 billion. At 5.4 billion, that's 1.3% growth, so better. And then, Valerie, I know you always like to ask about loan losses. Again,
how did you know?
Again, very, very low,
Yeah.
and shows that our customers are in good shape. So after releases of provisions, we saw a net release of 25 million in the quarter. Even if we strip out the release of provisions, our loan losses were only 3 basis points, which is well within our guidance. So all in all, I think pretty pleased with the quarter.
What are the drivers behind the lower than before estimated cost base? And especially, I know that digitalization and with AI, you can have incremental progress there, getting cost lower over time. But how low they can actually go, and how happy you are with the present level?
So our cost base gets a lot of focus, both from us inside Nordea and people outside Nordea. And it's true, over time, we expect to be able to deliver efficiencies from AI and other structural changes. And I would describe, particularly in relation to AI, for example, we're in the foothills, the lower slopes of that opportunity, and continuing to climb the mountain. We have a number of promising use cases, but it's still early days in terms of delivering on those efficiencies. A good example is, for example, in our financial crime prevention area, where we think AI can deliver much more efficiency. But in the meantime, we've got many thousands of people in Nordea getting to grips with the latest tools, both proprietary and vendor provided. A lot of enthusiasm, a huge list of things that we think people people want to do with AI, and so that has potential. In the meantime, it's just good discipline. So we're very focused on being tough on hiring and on discretionary and other expenditure. But we've got a capital markets day coming up, and costs is going to be a big area of focus there. So we'll say more then, and we should catch up after that.
Yeah, I'm looking forward to 5th November, I think, was
That's
the Capital
correct.
Markets Day. Just one more question about cost. In the long term, with all these technologies, of course, this digitalization trend and all, I think in Finland, at least in banking business, the number of employees has decreased for the last 35 years or something like that because of efficiency. But could your cost income ratio, could you push it below 40%, for example, in the long term?
You can't tempt me into talking about what we might say on Capital Markets Day. We definitely think there's scope for improvement. and we'll talk about how we do that.
Okay,
So.
looking forward to that then. How about the environment? You said that there was a pickup in loan demand, for example, in Sweden, but how do you see the Nordic economies in general?
So, I mean, the Nordic economies continue to be in good shape overall. Really good fiscal positions, and really benefiting from political stability. But we need growth, and I think each of our economies is in a different place, and at the moment in relation to growth, we have great confidence in the future, the medium term. But Norway, I think you continue to see growth. Sweden is coming out of a tough period of high interest rates, and I think is quite finely balanced. Denmark has had a really good run in the pharmaceutical sector and other things. It's a slightly tougher time at the moment, but I think still overall in good health. And just on our analyst call right now, Frank made some remarks about Finland, which is, I think, Finland tends to talk itself down a little bit. We think the fundamentals are there to grow. But what's holding us back is, and we see this in, for example, I talked about 8% year-on-year growth in retail deposits. Customers are putting their money in the bank and waiting to see what happens. So if we can see consumers get a little bit more confident and think about investing that money, then I think we're in good shape from a growth perspective. I said to analysts this morning that the pickup in September was business-led, and I think what that means is corporates are anticipating higher demand and growth, and therefore investing ahead of that. I think that's a positive sign, but we just need to be, balanced about it. A good September does not mean that the problems are all solved.
Yeah.
So
I think if you look at the ECB statistics, corporate lending is growing almost nicely all around the euro area.
Yep.
And perhaps this also applies to Nordics as well then.
Yes, that's right. And as I say, so it's a business-led recovery. Businesses tend to invest ahead of growth. So I think it's a positive sign.
Then I have a few more long-term questions. Firstly, just you don't have to comment explicitly on this, and I know that you actually can't, but there was news in, I think it was Dagens Industri, that their main point was that Nordea should actually buy Avanza and Nordnet, and the rationale was that those two digital platforms are way ahead in brokerage business, and they are attaining younger customers, and they are targeting younger demographics, and actually they are quite profitable businesses, of course, because they're quite capital light and so on. And at the same time, Nordea stopped developing your own investor app and so on. So how do you see this brokerage business, and should Nordea have a larger foothold in it?
Yeah. So it's an important question, and Vernie, to your point about the Dagens Industri article, I'm not sure we can afford both of them. But I'm joking. It's an interesting idea that Nordea should acquire one of those platforms, assuming that they could be for sale. And it's been mentioned before. I think we focus on the things we do in our own business. So I think, yes, the platforms have had some success in particular areas of the savings business, because our savings business continues to grow. We've seen 5% growth in savings income, actually 11% growth in assets under management year over year in Q3. So we're still seeing growth there. But there's no question that those platforms have been successful in attracting customers into certain kinds of business. And we can learn from that. We can learn from the way they engage with their customers, with how they make it interesting and exciting for people to trade securities. So there's much we can learn, and we think that given the strength of our footprint, the quality of our products and other things, is that we should be able to deliver a better experience for customers. Part of that is shifting from our older investor app and integrating that with our sort of broader daily banking offering and our mobile offering there. I think that's really good to be able to give customers everything in one place. And so we're excited about that prospect, and we're just going to work every day on improving the customer experience and being more engaging. So we're very focused on what we can do with what we have.
Do you see those kinds of digital platforms as a threat to Nordea? Because I think they have very good grip on, especially younger demographics, and they have I don't know if they're going to do that, but they have the optionality to expand to lending at some point. Now, of course, they offer a limit and that sort of stuff, but I think it's very hard to get customers out of them anymore when they start using those trading platforms. So could they expand at your expense in the long run?
Yeah, I mean, I look, it's much easier to say than to do. The platforms will expand into broader offerings. That comes with complexity and other things. But there's no question. I acknowledge that they have been successful with their customer offering, and alongside a range of other sort of competitors, we take them seriously.
Then lastly, this topic has been running around for many years, but European Central Bank is planning at some point to launch digital euro, which would be some sort of digital cash that people could use through their wallets. And of course, that would mean that they could bypass banks as payment intermediaries or payment systems. So how do you see digital euro in the long run? And is it a threat or opportunity for banking system if people start to put their deposits to digital euro instead?
Yeah. I mean, it seems to be an important objective for the ECB. It's not always clear why. So the ECB is pushing ahead with plans for a digital euro at the same time as the Riksbank, for example, in our home markets has decided that it's not necessary. The UK has shelved plans, and the US certainly isn't going there anytime soon. I think part of what lies behind the ECB's focus on this is the need to be able to provide cross-border payments and other things in a space that is often dominated by foreign companies, US or others. So there is a bit of defensiveness associated with that. When we and other banks talk to the ECB about this, we're very focused on ensuring that it doesn't disturb the financial stability of the Eurozone. And I think the ECB is listening. And that means that what you shouldn't do with that is disintermediate banks. And I think the ECB understands that. And some of the ways you can do that is to look at, for example, limits and other things associated with what might be in your digital currency wallet. And if it is about replacing the cash that people carry around with them, then it's actually a relatively small use case. There is a bigger use case in wholesale markets, for example, particularly in relation to payments. And so I think that's a little bit where the ECB is coming from with it. So they seem very keen. I think that if properly implemented, it can sit nicely alongside the more traditional banking offering. And then the banks themselves are also looking at payment innovations and other things. So, a group of banks have started looking at whether a stable coin might be a good route to go. And that might mean that a digital currency, which would be expensive to implement and have limited use, might be a cause to think again.
Thanks, Jan, for interesting comments. Looking forward to our next meeting.
My pleasure. Always good to see you, Venri.